Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes on Thursday, the 6th of February. Starting off with Barron Oil, where after a rather rocky ride over November, from the November to February period, basically the shares look like they've broken out properly, or they'll go up and stay up. That's what's said on the basis of a break of this November resistance line at 0.16. And we've got a rising trend channel from June heading for 0.35, so that's the target. Probably at this stage, only really back below the 200-day line if that happens at 0.12 pence, really killing off the bull argument or the breakout argument for the shares. Next situation is one which copied or highlighted rather a couple of days ago. It comes in the form of Conroy. Very nice consolidation here. Looks like a mid-move consolidation for the shares ahead of a fresh move to the upside. We went up from, let's say, sort of 5 pence to 17 pence. So the next leg up should be towards the upper 20s, perhaps hitting a line from September up towards the 27, 28 pence level. This stage, the ideal scenario is that we'd only go back below 10 to 12 pence as a nominal support area for the shares. The difficult pick for the day is EVGen, where, as you can see, it's been a rather tortuous process after the massive gap to the downside in November. Just a chance that we've got a bit of support coming in towards the 4.25 pence area, maybe stop loss just below 4 pence. On the basis that this is a falling wedge formation, but at this stage still waiting to see how it pans out. RSI at 18, we had a lower low for February towards, 4.4 pence, just below the 4.55 pence low for January. So just some hint of bullish divergence there for the shares, but maybe it's worth waiting a day or two just to see how it pans out. Maybe the best course of action here is to wait for an end-of-day close above today's current high at 5.1 pence. Stock of the day and stock of the past week has been Eurasia Mining. That's actually doubled over the last few sessions against some calls made by the doomsters about the stock. The previous target on Monday was 6 pence. That was hit rather easily yesterday, so that should become new support because that was a resistance line there from October. The view at this stage is that we're in a rising trend channel from October, and I can't really see anything between 6p and 18 pence at the moment. Possibility that there'll be an initial pause perhaps around this line here, 10 to 11 pence, that's from December, but really the overall rising trend channel doesn't look as though it's going to 18 pence, and that would be the target over the next 1 to 2 months for the shares. Less dramatic perhaps is image scan, and here you can see how we've just broken out of this symmetrical triangle that we had in place from November. The breakout level, I suppose, around the 2.1 pence level, and while we're above 2.1 pence, hoping for a top of November price channel target at 4 pence. Be cautious on the stock, maybe wait for an end of day close above that blue 50-day moving average at 2.52 pence before getting too excited or even going long. RSI just crossed through the 50 level as well, and the other positive of the day today is that we've gapped through that triangle, which does indicate there's some decent momentum there for the stock. Nearly as volatile as Barron Oil, but not quite, is Kibo Mining. Here we've had that sort of bit of Duke of York type marching the stock up and down there over the last few days, but looks like we're finally consolidating on the upside with the break of the October resistance line there around 0.45. While we're above 0.45, and we're hoping that we'll stay above 0.45, then the shares could hit the top of that October trend channel at 0.8 pence. Just looking at Touchstone Exploration next, I was concerned that I'd missed the stock and there wouldn't be much to say, but then I looked it up and it looks as though I talked about the shares on the 21st of January when they were around 24 pence, and obviously that's a pretty good jump there that we've had since then. Beautiful triangle break that we had at that time, so it's not surprising really that the stock has jumped up so high. Top of the channel here from March is at 50 pence, so that's probably the best case scenario target at the moment after any consolidation that we have for the shares. Probably one would be looking to see whether support in the lower 30s would emerge ahead of any new leg to the upside. One of today's movers, which has been on the back foot for a while now, is Powerhouse Energy. Looks as though it's found support at old resistance. That was the old peak in December there at 0.62. So we bounced off that yesterday and today. While we're above that, looking for a retest of the best levels of the year so far at 0.9 pence plus. Be cautious on the stock, maybe wait for an end of day close back above 0.7, which is that resistance line from the middle of January. Finishing off with Velocis, which never an easy stock to make a call on, but at the moment looks like we've got a straightforward symmetrical triangle break that happened around the 3 pence level, and while we're above 3 pence, looking for a top of what's that? That's July trend channel at 5 pence over the next few weeks. Stop loss back below the 200-day moving average at 2.69 just to be safe. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.